Let's clear this up first. Most people think investing and trading are the same thing, but they are not. Investing is long term. You are buying assets like DBS, QQQ, or Tesla and holding for years. Your goal is to build wealth slowly with compounding growth. It's boring but powerful. On the other hand, trading is a short term. You are looking for quicker profits by buying and selling more often. Could be day trading, swing trading, or option trading. High rewards, high return. Now let's zoom into 2025 because this year isn't like the last few. The market is volatile again, but this time the volatility isn't from COVID or banking crisis. It's coming from multiple fronts at once. In the US, inflation is still sticky, not as high as before, but not low enough for the Fed to relax. Interest rates are still elevated, and no one really knows if we will see cuts or more hikes. Uncertainty is back. This creates spike, dips, forced rally, and that is where traders try to make quick profits. But for investor, it's tough to know when to buy or hold. Back home in Singapore, it's more stable, but it's still not easy. Saving accounts are giving 2% to 3%, like Singapore saving bonds, T-bills, and bank like UOB One, or any bank that is giving daily interest with no requirement. CPF OA is giving 2.5%, rock solid and guaranteed. Robo-advisor are back in the spotlight. So for a lot of Singaporeans, the question becomes why risk investing or trading when I can get 2 to 3% just by parking my cash? But at the same time, there's a wave of new traders entering the market. Apps like Mumu, Tiger Broker, Webull, and IBKR are aggressively marketing in Singapore. You are getting free shares, cash voucher, referral bonuses. You can trade US option, crypto, and even fractional shares, all from your phone. And this is the dangerous part. It is never been easier to place a trade, but easy access doesn't mean easy money. You can buy Nvidia, Tesla, or sell a put in just 3 taps. But here's the thing, the market doesn't care if you are new. It doesn't care if you watch 10 YouTube videos or get a free stock. It will humble you fast and take your money just as fast. Because when emotion take over, when greed or fear hits, you forget your plan. And that is when mistakes happen. So in 2025, you have got two things happening at once. Safe returns are more attractive, but trading has never been more accessible. It's no wonder people are confused. So what should you do? Let me walk you through my exact strategy, how I balance between investing and trading, and what I recommend depending on where you are. This is the base of everything. This is the base of everything. Every month without fail, I dollar cost average into a few core positions. In Singapore, I invest in DBS, a solid dividend stock, strong fundamentals, backbone of the local market, or the STI ETF. It's a lower cost, broad exposure to Singapore top companies, or REITs like Mapletree Logistics. These are great for passive income. In the United States, I invest in SPY or QQQ for exposure to the S&P 500 and tech growth. Stocks will be like Google with strong cash flow and a long-term AI play, or maybe Palantir, high risk, high reward growth stocks, or Nvidia, the king of AI chips. But I size it carefully. I don't try to time the market. I buy every month, whether it's up or down, and I let time do the work. Where I park my money. Now here is the part where most people overlook. Your ideal cash need a strategy too. I keep some fund liquid in money market funds offered by brokers like Mumu, or T-bills, which is short-term Singapore government security, or even high-yield saving accounts like UOB One or any other account. I'm also very selective. I prefer accounts that doesn't require me to credit salary or spend on credit card. I want my money working without jumping through hoops. This part of my portfolio grows slowly, but it gives me a peace of mind. I don't check it every day. I don't panic during rate weeks because I know that time and compound interest are doing the heavy lifting. It's boring, but it's safe in the long run. Boring works. But that is only half of the story. That is the foundation. On top of this, I run a trading strategy, but with clear rules and only with money I can afford to risk. Let me show you how I do it and how you can apply to it too. Now let's talk about the second half of my portfolio, trading. And for me, this isn't gambling. Trading is my income strategy. I don't day trade. I don't chase meme stock. I use option to generate consistent cash flow. The two main strategy I use, the first one is cash secure put. This is how I buy stocks I already want but at a discount. Let's say I want to buy Tesla but only if it drops to 300. Instead of waiting, I sell a 300 put option. That means I'm agreeing to buy it at 300. If it hits that price, and I will get paid a premium upfront for taking that risk. If Tesla never drop, I keep the premium and move on. If it does drop, I buy Tesla cheaper than everyone else. Number 2, covered call on stocks I already own, like Palantir or Nvidia. I sell covered call. That means I'm willing to sell the stock at a higher price and get paid for that. So if Nvidia is trading at 170, I may sell a 180 call. If it doesn't hit that level, I keep the premium. If it does, I sell my stocks for a profit plus premium. This only works because I have my foundation in place. I'm not using option to try to get rich fast. I'm not trading with margin. I only sell options on stocks I understand, stocks I'm willing to own, and stocks that I'm familiar with. Let me break this down simply. There are three types of people watching this. Type 1, you are a beginner. If you are just starting out, no shame at all. We all start somewhere. You are probably still figuring out CPF or what a ETF is or where to even begin. Focus 90% on investing, build the habit, learn the basic, and stick to index fund or CPF top-ups or maybe a simple REITs ETF. Don't worry about option yet. Trading can wait. Type 2, intermediate. Now, if you have been investing for a while, you have built a few positions, you are starting to ask, how do I get more for my portfolio? That is when options start making sense slowly. Learn cash secure put, learn covered call. These are safer, income focused strategy, but only use them on stocks you already understand. Type number 3, advanced. And if you are more advanced, managing a 5 or 6 figure portfolio, you need structure. Use both investing and trading, but with rules. Track every trade. Use spreadsheet. Know your risk per position. This isn't about gambling, it's about building wealth with discipline. So, should you be investing or trading in 2025? If I have to give you one answer, start with investing. Layer in trading slowly. But whatever you do, please have a system. Don't follow the hype. Don't start trading option without learning it. Don't wait to start either. I will keep sharing my full strategy, my trades, my mistakes, my update so you can learn from my journey here in Singapore. Like if this helped you. Comment your current strategy. Are you investing, trading, or both? Like always, thank you for watching and I'll see you in the next video. Until next time, trade smart and stay profitable.